Henry, thanks very much for joining us. A poor year as expected in terms of the UK hotel sector for investment. I mean, with your research showing a 70% decline in volumes. What are some of the key trends underlying that data?
If we take a brief step back, in 2019, there was 6 billion worth of hotel transactions. In 2020, we saw 1.8 billion, of which 1.4 billion was accounted for in Q1 of 2020. And a large proportion of that was the Ritz transacting about 750 mil. So why the decrease in volume? Firstly, there was limited stock coming into 2020. Owners were hesitant about bringing assets to market as they were seeing what was going on in the Far East. And then we got hit by COVID, all hotels closed, everybody kind of looking at each other going, what's going to happen? And then you overlay the support provided by government in the form of furlough, VAT and rates, and then overlay the kind of support provided by lenders, banks and stakeholders. And this substantially reduced the number of hotels getting into difficulty, therefore reducing the number of potential administrations and therefore less sales. But then if you look at a different sector of the hotel market, London, for example, you've got many owners who are extremely well capitalized and can ride out the storm and, would not consider selling. But what the data doesn't show is the quantum of equity looking to invest into the sector. And we've managed a number of sales where we've actually ended up into competitive bidding processes as long-term investors vie for the right kind of hotel opportunity. The lack of debt in the market has had an impact, but its impact has been minimal because what it's actually done is reduce the number of interested buyers that can bid for opportunities. It hasn't actually reduced necessarily pricing. So the impact has been de minimis on that part.
And in terms of I suppose the overall outlook for the sector, how important is the speedy rollout of the vaccine?
The sooner that hotels can open their doors, the sooner cash can start flowing around the businesses. This means taking people off furlough, getting them back into restaurants. And also this has an impact on the supply chain to hotels as well. But what was really interesting in 2020, due to the staycation market, we witnessed some really positive trading periods for regional hotels in certain markets. Some hoteliers made more EBITDA in 3 to 4 months that they were open than in 2020, than they made for the whole of 2019. Business travel and meetings and events will take longer to come back as corporate companies feel comfortable to hold those events. However, I know hoteliers who've got considerable business on the books. For example, weddings have just been pushed back and delayed. And actually, they could have quite a good trading period for the rest of the year as people manage to have these events take place.
How do you see the broader outlook for 2021 in terms of the sector in the UK?
I think what's fundamental about the hotel sector is that there hasn't been a structural change like there has been, say, in the retail sector. So actually, the long-term fundamentals for the UK hotel market remain strong. We have a vaccine, and as soon as lockdown is lifted, people are going to want to get away. And whilst there's some uncertainty with regards to other countries and vaccine rollouts, the immediate choice is the UK. And therefore, trading performance is going to be probably pretty strong in Q2, Q3. As mentioned previously, there is considerable equity looking for opportunities. Lenders hopefully coming back into the market, limited stock. It's going to be a busy second part of the year where we'll see increased transactions and volumes. And so really quite lots to look forward to.
And there's a lot of discussion around distress, particularly in some of the markets that are impacted by the health crisis. Do you see that coming through into the market? And where are the opportunities for investors?
There's been a lot of talk about distress in the hotel sector. And I think that's predominantly based around what happened in the last global financial crisis. I think a lot of lessons were learned by lenders, stakeholders in that time period. And it's almost we've gone to the other end of the scale where lenders are remaining very cautious, very supportive, wanting to work with their borrowers. And my personal view is actually, I don't think we're going to see as much distress as everybody is anticipating. Yes, Richard, there's going to be some. There's going to be examples of where hotels they're in requirement of considerable capex. The management teams are weak, and there's going to be basically one route for them to go down. And but however, for us as advisors, it's to ensure that we maximize every option for them. So it may be an off-market placing. It may be considering alternative uses. It may be, bringing in a party that may take a stake in the company. So what we hope to achieve is to ensure that we explore all options for owners. It's not necessarily just a sale. And I think investors are going to have to be patient for the right opportunities. There may be more metropolitan hotels coming to the market where they haven't had the bounce of the UK domestic leisure market, and they've got 3 months or maybe 4 months of working out where their cash is going to come through to keep them going until lockdown is lifted. So it's a very mixed picture out there. I don't think you can be generalistic about what's going to necessarily come to the market.
Great. Thanks very much, Henry. Really interesting to catch up. Thank you.